Solved problems. 10-column worksheet, income statement, balance sheet, statement of changes in equity. Problem. A 10-column worksheet is given here with unadjusted trial balance like cash in bank debit 310,000, accounts receivable 85,000 debit, estimated uncollectible accounts credit 3,000, supplies inventory 15,000, prepaid rent 8,500 debit, prepaid advertising 10,000 debit, machine 720,000 debit, accumulated depreciation machine 105,000 credit, accounts payable 35,000 credit, notes payable 100,000 credit, FNIJA capital 783,500 credit, FNIJA drawing 18,000 debit, shop revenues 235,000 credit, taxes and licenses 3,000 debit, salaries and wages 72,000 debit, utilities expense 20,000 debit. Total debits and total credits in the unadjusted trial balance are given. In the adjustments, on the debit side, accounts payable 8,000, taxes and licenses 5,000, salaries and wages 10,000, supplies expense 12,000, depreciation expense 85,000, advertising expense 4,000, rent expense 3,000, and on the credit side, accrued tax and license 5,000 only are given. That means the debits and credits of adjustments are not balancing in the problem. Required. Complete the 10-column worksheet and prepare income statement, balance sheet and statement of changes in equity. Solution. In the problem, the unadjusted trial balance is okay, but the adjustments debit and credit are not matching. That means the other aspect of the adjustment needed to be placed properly as under. Let us place the second aspect of adjustments properly wherever they are missing as following. On the adjustment side, on the debit side, accounts payable is debited with 8,000. That means accounts payable is reduced by 8,000. That means we have paid accounts payable, so we have to reduce cash on the credit side with 8,000. The second adjustment, tax and licenses 5,000 debit. So accrued tax and licenses 5,000 is already there. So salaries and wages 10,000 debit. That means the expense is increased. That means there is outstanding salaries and wages is there. So accrued salaries and wages 10,000. Supplies expense 12,000. So there is salary supplies inventory credited with 12,000. This is an expense and has supplies used during the year. Depreciation expense 85,000. We have to add this to the accumulated depreciation on machinery on the credit side 85,000. Advertising expense 4,000. It is prepaid advertising. We are reducing by 4,000. Rent expense 3,000. We are reducing prepaid rent by 3,000. Now total adjustments debits 127,000. Total adjustments credits 127,000. Now once the adjustments debit and credit are obtained, we can proceed to fill the 10-column worksheet as required. Now let us prepare adjusted trial balance from the unadjusted trial balance and adjustments. Cash in bank debit 302,000. Accounts receivable debit 85,000. Estimated uncollectible accounts credit 3,000. Supplies inventory 3,000. Prepaid rent 5,500. Prepaid advertising 6,000. Machinery 720,000. Accumulated depreciation machine 190,000. Accounts payable 27,000 credit. Accounts accrued salaries and wages 10,000 credit. Accrued taxes and licenses 5,000 credit. Notes payable 100,000 credit. FNIJA capital 783,500 credit. FNIJA drawing 18,000 debit. Shop revenues 235,000 credit. Taxes and licenses 8,000 debit. Salaries and wages 82,000 debit. Utilities expense 20,000 debit. Supplies expense 12,000 debit. Depreciation expense 85,000 debit. Advertising expense 4,000 debit. Rent expense 3,000 debit. Total debits in adjusted trial balance is 1,353,500 and the credits are 1,353,500. Income statement. Shop revenues 235,000. Expenses tax and licenses 8,000. Salaries and wages 82,000. Utilities expense 20,000. Supplies expense 12,000. Depreciation expense 85,000. Advertising expense 4,000. rent expense 3,000, total expenses 214,000, total sales revenue 235,000. So there is a profit of 21,000. Balance sheet. Cash in bank 302,000 debit, accounts receivable 85,000 debit, uncollectible accounts 3,000 credit, supplies inventory 3,000 debit, prepaid rent 5,500, prepaid advertising 6,000, machine 720,000, accumulated depreciation machine 190,000, accounts payable 20,000 credit, accrued salaries and wages 10,000 credit, accrued taxes and licenses 5,000 credit, notes payable 100,000 credit, FNIJA capital 783,500, FNIJA drawings 18,000, profit 21,000, total debits 1,139,500, total credits including profit 1,139,500. Income statement. On the credit side, shop revenues 235,000. On the debit side, salaries and wages 82,000, utilities expense 20,000, supplies expense 12,000, depreciation expense 85,000, advertising expense 4,000, rent expense 3,000, taxes and licenses 8,000, profit 21,000, total 235,000. Balance sheet. On the liabilities amount, assets amount. On the asset side, current assets, cash in bank 302,000, accounts receivable 85,000, less uncollectible accounts 3,000, net accounts receivable 82,000, supplies inventory 3,000, prepaid rent 5,500, prepaid advertising 6,000, total current assets 398,500, machinery 720,000, less accumulated depreciation 190,000, net cost of machine 530,000, total assets 928,500. On the liability side, current liabilities, accounts payable 27,000, accrued salaries and wages 10,000, accrued taxes and licenses 5,000, notes payable 100,000, total current assets 142,000, equity FNIJA capital 783,500, FNIJA drawings 18,000 less, add profit 21,000, total equity 786,500, total liabilities and equity 928,500. Changes in equity. FNIJA capital at the beginning 783,500 less FNIJA drawings 18,000, add net profit 21,000, FNIJA capital at the ending 786,500.
Recap. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.